Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the Australian dollar, Friday's price action reversed very sharply after 3 attempts at the 78.15 level clearly was rejected, and from the dollar index surging on the bullish divergence, the market plummeted back towards the bottom side of this broad range of 76.90 to 78.15. At present, the market is now waiting for the RBA, which is widely expected to keep interest rates on hold, but it's the statement. Will the statement be dovish or turning slightly hawkish? Meanwhile, we look at the technicals. The RSI has crushed the midway point and still potentially holding to a negative bias. Looking at the MACD, well, we're nearly through the zero, but not confirmed yet. Once the two have married up, then yes, I would say there'd be more pressure on that 76.90 level. If we do see a break, then that would expose the region down towards 76.25.35 with a base seen at 75.80.85. So with the dollar index surging to a high around 91.32, which was about nearly 1% or getting close to that, the euro rejects the level of 121.5 and plummets now back towards the bottom side of the range, seen at 119.90. Looking at the technical aspect, well, we're not quite fully confirmed this bearish pattern due to the MACD, not through the zero axis. But if that does concur with the RSI and they both marry up, then we are looking for a further weaker play and maybe down towards that 118.60.80 area. All eyes turn to this week's non-farm payrolls number, and with the unemployment expected to drop from 6% to 5.7%, that could see a little bit more bullishness from the US dollar and bearishness to the euro, which I've been in favour of as this pattern buckles. Looking at dollar yen, the upside target, which was around 109.25, was crushed, and now posting a fresh high of 109.65 today does give scope at this point to maybe edge towards 110, but I would say due to the RSI being slightly overbought like we saw back here at the end of March, we could soon see some profit taking coming back to this rally and therefore put a little bit of a dampener on the bullish sentiment and maybe even put the brakes on to see a slight pullback. Sterling rejects that level of 139.70.75, which was a key level, or roughly around that level, around 50.80, and the market plummeted back towards 138, now putting focus back towards 136.70. With the technicals nearly married up together, then does expect to see a weaker pound this week. This in turn could see that rejection from 151 look back towards the bottom side of the range, which I'll see around 148.40.90. Gold not showing as bullish as it was not so long ago, and with the recent couple of days of bearish candles and the struggling technicals, looks for a target around 1,746, which is roughly around $30 away. Let's see what happens from there. I'm not going to come out with any bigger call than that until I can assess where the technicals are, but in the meantime I still feel the bears are still lurking. Wrapping up with oil, but the market tumbled away from that 64.35 level after lack of momentum to the upside, which now concerns with India's COVID increasing. The market's getting a little bit on the jittery side. Nevertheless, the technicals, though, are more in favour of seeing this pullback and see if we can challenge this trend line, which is seen somewhere around 61.50.80 area. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day and a great start to the new week.